Hi, if you are considering buying a condo in Central Florida, there are some new loan requirements that you should know about if you're getting a conventional loan. I'm Bent Danholm with Maxim Realty here in Orlando, and today I'm here to talk about the latest Fannie Mae and Freddie Mac requirements for condo projects. But first of all, let me get the disclaimer out of the way. I am not a mortgage broker, I'm not a mortgage lender, so this video is not intended as mortgage advice, it's just plain old information. If you need mortgage advice or a more in-depth explanation of what I'm talking about today or anything else about a mortgage loan, I'm happy to refer you to one of our preferred lenders so they can explain everything much better than I can. But let's get back to the topic. What exactly are Fannie Mae and Freddie Mac looking for when it comes to approving condo loans these days? Well, it's all about making sure that you, as the borrower, are making a sound investment. They want to ensure that the condo project is financially stable and physically safe, which ultimately also helps you avoid any unexpected or at least some unexpected expenses down the road. Now, if Fannie Mae has already approved the condo project, you're in luck. If the projects will then meet their requirements and you're good to go. What I'm talking about today are condos in projects that have not been approved by Freddie Mac or Fannie Mae. What will happen if the condo is not already Fannie Mae approved? So basically what your lender will need to do is to gather a little bit more information to ensure that everything checks out. They'll be wanting copies of recent structural or mechanical inspections, along with other key details like any ongoing litigation or the status of the HOA budget, other information to ensure there are no critical repairs needed for the project, not your individual condo, but the project as a whole, information about commercial space in the project, and single entity ownership, as they call it, which means basically that a single person or a single company owns a lot of units in the project. Information to ensure that the projects that you want to buy in are not transient in nature. They will most likely also want a copy of the liability and the master property insurance policy, and if it's in a flood zone, obviously with the flood coverage. They might want to take a closer look at the association's account to ensure that the association is financially sound. And while all these extra steps might seem like a hassle, they are there to protect you as the buyer, to ensure that you don't get in financial trouble, and by default, then they'll get in financial trouble. And furthermore, if you're looking at condos with a higher loan-to-value ratios than the normal, there might be even more requirements to consider. Your lender will probably want to make sure that the HOA is putting aside funds for future repairs, and that the property has the necessary insurance coverage. So whether you are looking at a cozy condo by the lake or a high-rise downtown, just remember that understanding these requirements is key to a smooth home buying process. So if you have any questions or need help navigating the world of condo financing, don't hesitate to reach out so I can connect you with a lender who can guide you through. I'm always here to help. Until next time, thank you so much for watching and happy house hunting.